What's the global view on let's say, India, for example, after two things have happened, that the US-China trade uh, tariff war has de-escalated, and of course, we've now put geopolitics behind us in terms of the India-Pakistan thing, with India really coming out trumps. Trinh Nguyen, senior economist covering Asia at Natixis, Johnson right now on the show. Trinh, always a pleasure talking to you. And yes, I saw your tweet wherein you've mentioned that you're going to be on my channel, on my show, to talk about the US-China trade relations and the de-escalation and the prospects on the India-US deal as well. Thank you for joining in. First, Trinh, because you speak to possibly a lot of your clients and your peer sets around what is the view on India, given the fact that, one, the trade tensions across the world have de-escalated, and on India's case specifically, the geopolitical stress is also behind us?
Well, I think India positioning with investors has increased a lot, particularly in this Trump 2.0 versus Trump 1.0. It's emerging as potentially a big winner when the reciprocal tariffs came out with Southeast Asia countries that are very linked to China being severely targeted. Of course, all of this is very paused now, but India is emerging at somewhere that is close enough to be linked with China for supply chains, but far enough geopolitically to gain from this. And you can see that already with Apple, with the ambition of supplying US market from India totally by end 2026. So India is emerging. The question is how India is going to make sure that it's going to gain more of that. I think the Modi government is very aggressive this time around versus the last time. If you look at India trade liberalization, for example, we have the UK-India trade deal, which is not really talked about given the fact that Pakistan-India conflicts became much more prominent, and also what's happening with US-China. But I think that's an important point to highlight, the willingness of the Modi government to look outward for growth. And I think that certainly it needs, given the job issue onshore and finding more trade partners is very important. I think the EU FTA is under negotiation, will get pushed forward as well, and it shows the willingness that it needs to find markets to make India much more attractive. And finally, the US-India deal. That's one is a much tougher one to negotiate in the UK, obviously, given that it has a trade surplus and so on and so forth. But the reality is that India has a lot to lose relative to Pakistan in this conflict. And I think what it has to lose is not just the progress it's gained so far, but the potential of being the center of supply chains. And if the global economy is going to be more dependent on China, on India, not just for domestic demand for growth, because in terms of demographics and the ability of India, if it leverages itself well to grow from this low positioning of the corporates in terms of leverage, then it needs to have a lot of stability, and it needs to also consistently brand itself as a stable place to build factories. Because India traditionally has been very, very good at attracting portfolio flows, which is basically foreign investors buying equities or buying bonds. That is something that you can easily enter and easily exit. In terms of FDI, it's much more long term because you enter, but you don't expect to exit 10 to 20 years. And so as a result, investors are looking at a longer horizon. From my point of view, that although the conflicts escalated more than before, it's very clear that both on the Pakistan and India side, it doesn't want to take it to totality of war more than a deterrence. But walking from that edge is very important. In terms of prospects for foreign investors to look at this as a long-term investment thesis. And I want to emphasize that not just from an equity and bond portfolio flows in the short term, but long terms in terms of building plans and planting roots, deep roots in India for supply chains.
Got it. Yeah, and that point is well noted. But now that this is behind us, is the stress around, I mean, was there stress when the geopolitics started, and is it behind? That is the first question that I have. And then I also want to talk to you about the US-China trade deal. But first, this one.
I'm not a geopolitical expert, but I do think that, of course, I think fundamental issues are not resolved, so which means that you had something in 2019, we have something again in 2025. It's been 60 years since the last major conflict, so I do think that it is coming again. But at the very minimum, we looked the last time as a benchmark. At the very minimum, we have some peace for now. The issue here is I do think that we're in a very fragile environment globally and geopolitically, and it's important to be mindful of the costs. And I'm very happy that I don't have that difficult position. But at the same time, I think to look forward to leveraging this to gain, right? And if you look at many of these conflicts, the big winner, if there's a Pakistan and conflict escalated severely, that probably would be China, because it's able to sell more arms to Pakistan, is also able to basically not have to consider India as an alternative to China as a reshuffling of the supply chain, as well as an alternative in attracting investment. Because in this environment where everyone is considering their positioning in China's supply chains, their over positioning in US financial markets, the big question mark is where else then, right? And when you don't have another where else, that's a big problem. And I think India can be that place for global investors, not just short-term plays, but long-term plays.
Got it. What's your view on, let's say, Asia and EM, now that there is a less tension or less conflict on tariffs and trade between the two major economies as well, but even generally, or at least optically, there is lower stress?
Right. I think the key here is that since reciprocal tariffs, as you are well aware, there was a huge shock because everyone got a big tariff, particularly the Southeast Asian countries. Now, and for India, it got a pretty high level of tariffs, but not the highest. And also it got a bunch of exemptions, right? Semiconductor, pharma, ICTs, and so on and so forth. These are the exemptions for reciprocal, which India is what India trades, right? So for the terms of tensions, I think what's very clear for markets there is a Trump put. What that means is that while the US may be the biggest consumer of global goods, it does need others to maintain its supply chains, because US companies are very, very interwoven in regional and global supply chains. And so as a result, it will have a huge impact on the industrial sectors of the US. So as a result, I think the positioning of India, the positioning of many countries have risen a lot, particularly when Trump went really hard on China. The de-escalation of China shows that at a very minimum, there is time for the pause. We have a 10% pause on reciprocal tariffs down for the rest of the world, for everyone, including China. China has an additional 20% on fentanyl. But for India, I think there is time to negotiate, and there are even though tariffs for the US are much higher, they're higher in terms of relative to before Trump 2.0, but they can be lower on a sectoral side, right? The UK-US tariff deal shows that there's room for steel, for example. The UK doesn't face steel exports, but the UK doesn't even have enough for its own consumption. But it managed to lower auto. So I do think from India, there is room for sectoral tariffs to be lowered. There's room for further liberalization, and for many countries. But the worst of tariffs are behind us, but it's not totally behind us, because I do think that President Trump is very committed to making sure the US is self-sufficient in strategic sectors, not all sectors. For lower labor intensive, they're not very interested in. But I do think for high-tech sectors, and that means that there will be quite a lot of tariffs. The second thing is that it's very likely that they want to bring some of that closer to shore. The USMCA is an example where Mexican qualified goods that are USMCA qualified are tariff-free. And that serves two birds and one stone. And that means that the positioning of Southeast Asia,
right,
although it's risen above reciprocal tariffs today, is actually being questioned on a longer horizon.
Got it. Okay, out of time completely on the show, Trinh. But thank you so much for joining in and giving us your perspective. Really appreciate your time.
Anytime. Thank you very much.